Hello traders, welcome to another daily analysis. Today is January 4th, Wednesday. We are almost at 6:30 p.m. Eastern Standard Time. So let's get into our analysis. The construction PMI from UK today in the latest session was another positive number to support pound. And as mentioned, the data from UK in the past few weeks or even few months were largely actually surprisingly positive. I mean, ever since the Brexit exit in June, people were really expecting a much worse numbers, but that was not the result. Fundamentally speaking, the number actually came out all quite positive. However, as mentioned, the general sentiment for British pound is still very negative, and that's because the uncertainty of Brexit, the negotiation, the triggering of Article 50 is just so large. It's larger than any amount of good data that could change this fundamental fact, and that's why we are only looking to short it upon negative surprise, and because we didn't have it, so we didn't have any trade, unfortunately, for the British pound. The next London session, we will have the service PMI, which is also the most important PMI data, as the service industry is the 70% of the GDP for UK. So this will be a much better, much larger effect. And since we have two positive data already to support pound, if we have a negative data in the next London session, that will really give us more room to go, basically. But if we have a positive data, we're just going to let it slide. We are not going to buy British pound, basically. That's just not our long-term plan. The CPI flash estimate, core CPI flash estimate from Eurozone were both positively expected and previous. As mentioned, it was largely from the higher oil price in December, and also December, you can tell the service PMI was also positive for Euro countries from December. And December was also, of course, also is a Christmas season, as holiday season. So, it just always expect to see better numbers from December. That's just the usual thing. However, that does not change the underlying picture of Euro. Right now, Euro, especially in 2017 this year, is still largely uncertainty. Two major elections and also the continued easing cycle. These are a much micro economy and much fundamental view than the PMI number or the CPI number. So that's why our view for Euro is still a negative currency to sell. Same thing applied to British pound. So you have this good PMI numbers, yesterday and today, but our view toward British pound is still negative. We just really need a momentum. We need a catalyst to sell these two currencies. The FOMC meeting came out in the afternoon today, and basically the two major things is that, first of all, the Fed warned of the growing inflationary risk from Donald Trump's proposed fiscal stimulus measure. Now, what does that mean is that because the Donald Trump is saying that after he sworn in, he is going to have a lot of new regulations or policies, and that's also going to loosen up the regulation. It's going to stimulate the financial market. But the financial market or the employment data are already at a very good levels. So, right now the economy is actually don't need any more stimulus. You need to tighten up gradually. But unfortunately, that's not the view from Donald Trump. So basically, the Federal Reserve have to have a different aspect from Donald Trump. And that's why they are worried that the new policies are actually going to push inflation further to a risky area. Now, what does that mean is that, of course, that will make Federal Reserve less likely to cut interest rate. That will actually make them to maybe hike the interest rate further in order to control that risk. Now, of course, the major thing is the uncertainty. And that's really what investor is looking at. It's because right now you have a conflict between the government and the Federal Reserve. And that's not a good thing, because you really want the government and the Federal Reserve to be on the same page so that economy can function much, much better. But now if you have a different point of view, then that's just signal a lot of uncertainty. And that's what the Federal Reserve, that's what the statement says, a lot of uncertainty lies ahead. When investors hear uncertainty, they're not happy about that. So basically, that's what happened. They are, as you can see, the money is going to the bond market today. Our market actually surged higher today. And this also, of course, dragged the US dollar down a little bit from the 14-year high level. And also might help, safe haven currencies such as Japanese yen and Swiss franc. Now, of course, the fundamental picture for US dollar is still very strong. The fundamental picture for US economy is still very strong. But this is just providing a little bit negative sentiment for US dollar. And WTI finished up about $53. It's because of the weak US dollar today, growing PMI number from Eurozone, and expectation for OPEC agreement to finally take effect this week. So all boost Canadian dollar to a new area. And equity market were also largely green, of course, that further helped commodity currencies such as Canadian dollar, but also helped Australian dollar greatly. Now, Australian dollar also had help from China, as we have a good PMI number from Monday. But also we have a rumor saying that the Chinese capital control has loosened a little bit. Of course, that support the currency exchange, and that support Australian dollar again, because Aussie is a go-to currency when Chinese investor wants to change Chinese yuan. They either change to US dollar or Australian dollar. Now, New Zealand dollar, on the other hand, did not get too much help from this risk on sentiment, because the GDT price yesterday was just such a negative number. So our game plan now tomorrow, because we have a US dollar, we have a US API data tomorrow. We also have an ISM non-manufactured PMI. And we also have non-farm payroll this Friday. So we're not looking to take any US dollar daily trade, because there's two major risk events happening tomorrow and Friday. So we are not going to take any trade at this point. It's too late to do that, even if we have signal. So we're not going to take any US dollar trade. We're also not going to take British pound trade, because we also have a major risk events tomorrow. So that's really leave us with only Australian dollar or Canadian dollar to buy. Those are the two currency that have a strength into it. But because the crude oil inventory is coming out tomorrow, so that will only leave us, only available currency to buy for daily trade is Australian dollar, if we have any signals, technically speaking. Currency to sell is still Euro, Japanese franc, Japanese yen, and Swiss franc. Now, Euro, although you do have a good PMI number as mentioned, but the underlying fundamental picture is still quite negative for Euro. So that's the daily trade game plan. Now, risk events to trade for the next session. I'm going to trade the service PMI for UK only if we have a negative deviation. So I'm looking to sell British pound if we have a negative PMI number. Usually I will sell against US dollar, but because US dollar right now has a little bit negative sentiment, also the API number and the non-farm payroll, so I'm actually going to choose Australian dollar instead. So I'm looking to short pound Aussie upon negative service PMI number. Tomorrow we also have the ADP employment data, so I'm also going to buy US dollar if the data is a positive surprise. However, if the data is a negative surprise, I'm actually going to sell US dollar against Australian dollar. But knowing that I am doing this against a major micro picture, so I'm only going to have a really tighten my stop loss fairly quickly because when I know I'm against a bigger trend, I like to tighten my stop loss faster. And that's really the two events I'm trading tomorrow. The ISM non-manufactured PMI from US, it's also tradable, but that comes after the API, so that really depends on what happened to the API. Crude oil inventory, I don't trade it usually, and the reason is because I just don't know enough about it. Now, if you look at a crude oil inventory, it's not just the crude oil only. There is distillery, there's gasoline, there's natural gas, and people who are trading energy sectors are really looking at everything. And because I'm not an expert on that, so really, I sometimes just don't know enough about it. I don't know which direction it's usually go. I don't understand the correlation well enough to trade it live. So I do generally take into consideration of when buying Canadian dollar, but I'm not trading the events as if it's a risk event. That's tradable for a catalyst. So that's why I'm not trading crude oil inventory personally. So that's pretty much it, fundamentally speaking. Now, really nothing has changed much, but the sentiment has shifted a little bit. Of course, it's being negative for US dollar due to the Federal Reserve policy today. And it's a little bit still positive for Australian dollar and Canadian dollar. Still negative for Japanese yen, Swiss franc, and euro. But of course, euro has a little bit positive sentiment due to the positive numbers that we have so far for this week. British pound also has this positive sentiment. Sorry, it has this positive fundamental, but has a negative sentiment, and that's why British pound is still a negative currency to sell. So that's pretty much it, and we're going to take a look at our currency pairs. But that's pretty much it. Nothing, fundamentally has changed. But you do have a negative sentiment to pin down US dollar for now, and that might actually be not that negative because that might provide us a better opportunity to buy into US dollar if we have a dip. So let's take a look at our 28 currency pairs. Just give me 1 second. So, Euro Pound. As you can see, really not much happening today, really in this range area. And as mentioned, although you have a positive data into British Pound, you also have positive data into Euro today. So really not much happening. Euro Swiss is, again, not much happening. You have, for me, it's really not significant. It's nothing to do with the candlestick. It's really where it shows, it's really just in the range area for Euro Swiss. For Euro dollar, you have a green solid candle today due to, a weak sentiment into US dollar and the positive sentiment from Euro. Now, is that good enough for me to buy? No, because I'm not going to get into any US dollar trade right now since we have two major risk events coming up tomorrow. But even if we don't have the risk events, I still don't like to go against US dollar in daily chart. As mentioned, that I don't want to go against a large fundamental trend. So this just gives me maybe a better opportunity to sell Euro dollar if we have anything happening at 1.06. This will be a very good area to continue sell Euro dollar. Euro Aussie, it's a continuation downtrend, but you do have a reversal signal today. So, if you are selling Euro Aussie, maybe you can tighten your stop loss just to prevent a nasty reversal. But of course, that doesn't mean it's going to go up. Fundamentally, it's still quite in favor for Australian dollar. Let's take a look at EuroCAD. Same thing here. You have a little bit reversal into the Euro dollar due to today's positive data from Eurozone. That might change tomorrow, but that might not. Really depend on what happened to the crude oil inventory tomorrow. Euro New Zealand, it's really not much happening. It's range bound, but I'm actually surprised to see that New Zealand dollar actually holds well, because you do have a little bit strength into euro, but not much effect into New Zealand dollar. New Zealand dollar also suffered from the negative GDT price yesterday, but nevertheless, the whole environment is still a quite risk-on environment to support New Zealand dollar, and that's why you have this. Although it's a green candle for Europe, but it's it's very small. Euro yen, it's really not much going on as green candle, but really just an inside bar, really a range area, and really that's pretty much not surprised for the first week of our trading, first trading week of the year, because like I said, people are just slowly getting back at their trading desk. It's really not expect to see too much action. Even I don't think it's too much action even for January, to be honest with you, because really people are still looking ahead for the new president. So really things are a little bit tricky for this month because a little bit uncertainty coming up, especially politically speaking. So things will start to pick up maybe after February or March. But who knows, maybe things will happen and really start the thing rolling. But for the first week, generally speaking, it's going to be a quiet week. Pound Swiss, again, really not much going on. We are really in this range area. But the interesting thing is that, as I mentioned, this is why you can just tell by looking at the chart that British pound really is having a negative sentiment, because you actually have a very good PMI number today and yesterday, but look at the price action. People just don't want to buy it. It's just nothing happened here. Take a look at cable. Cable might be better because the negative sentiment into US dollar. So yes, you do have a solid green candle today, but if you're really looking at a bigger picture, really, you're still just within this range area. So as mentioned, every time you have a positive data from British pound, it just goes a little bit. It goes up a little bit. So it just shows you price action wise, traders are really not looking to buy British pound. And regardless of the fundamental, you have to understand the end of the day, fundamental is important, but at the end of the day, it's really what the players are taking into that consideration. So what do people want to interpret the fundamentals? And that's really the artistic side of trading, that you can have a great fundamental analysis, but it doesn't mean the price action would go in that direction. On the contrary, the price action will go against the fundamental for a lot of time. And that's why technical analysis definitely has its place. It's because, and that's why some people argue, is because at the end of the day, the market is composed by traders. So you really also have to analyze what are the traders doing and what are they thinking. And the best way to do that is really by looking at the chart. So that's why, don't just be too stubborn because maybe you are very good at fundamental, maybe you are very confident in certain economy or a certain country. But I understand that trading has its own artistic side, and really have to take into consideration of what traders are actually feel and what are they actually doing. Pound Aussie, same thing, really not much going on, still a range area. Pound CAD, it's pretty much the same picture. Pound Aussie, it's pretty much the same picture. And Pound Yen, same thing. Now even Pound Yen is not a large surge. I was actually expect to see maybe a larger green candle for British Pound since you have a quite good data. But all this just signal that really the market or the trader is looking forward to sell British Pound. Swiss franc, Japanese yen, really nothing to say about this pair since they both are same personality. Dollar Swiss, it's a little bit down day for US dollar. As mentioned, a negative sentiment from Federal Reserve FOMC statement. A large drop, it's a large strength into Canadian dollar. And of course, it's to affect a negative US dollar will also boost the oil price. It will also help the Canadian dollar. So that's why, dollar CAD is a really good pair to trade if you are following oil market. And really, it's interesting. Sometimes it will have this kind of large candle or like kind of large red candle. So we're looking forward to see what happens tomorrow to the crude oil inventory. Dollar yen. Now dollar yen is mentioned really stuck in these two area, but as mentioned yesterday that you do have the beginning of double top. So this really might drift into the sideway within this box, or it might touch 116 and then keep going up again. Of course, that's what we're hoping for because we're looking to buy dollar again against Japanese yen. So if we have any signal at 116, that might be a good entry again. But we'll have to see what happened to the non-farm payroll for this week. Aussie Swiss continue surging of Australian dollar. Yes, as you can see, Australian dollars keep going higher. And again, that's why I'm looking to buy Australian dollar against British pound upon the next service PMI from UK. Because Australian dollar has been largely sold pretty much for the midway of December's, and this really has a lot to do with the strength of US dollar, also the capital control from China. That's already taking into a negative effect for Australian dollar. Now Aussie CAD has this kangaroo tail. I'm pretty sure it's not really a kangaroo tail because it's probably not close high enough. But anyway, it's a reversal signal. But again, because we have crude oil inventory coming out tomorrow, so try not to get into a trade ahead of these kind of risk events. And also, it's not really a pair to sell because they both are quite strong currencies right now. Aussie New Zealand, another update for Australian dollar versus New Zealand dollar, and Aussie yen is also another update. But we don't have any signal right now. CAD Swiss is another update. CAD yen is the same thing. New Zealand Swiss, it's really a range area. New Zealand dollar, it's actually not bad. You have this again a reversal signal, but it's really just an inside bar. For me, this is not really significant because you really just stuck together. And New Zealand dollar does not have that strong sentiment as Australian dollar due to its weak GDT price yesterday. Now New Zealand CAD actually has a red bearish candle. Now normally it might be a good candle, a good signal to sell actually because Canadian dollar is so strong right now. But because the crude oil inventory, so we are not looking to get into Canadian dollar trade. New Zealand yen, really not much going on. So again guys, I know it's not much going on, but that's just a regular trading day for us. Really a lot of time you're just waiting for the signal. At least for me, that's my trading style, especially for daily candles. As for risk events, as mentioned, tomorrow you can trade the service PMI for British pound. You can also trade the API non-farm employment change for US dollar. These are the two events I'm looking to trade tomorrow. So these two, and I have typed in a deviation number right here, so you can take a look at that. And then if you have number outside these two areas, that will be a deviation. That will be a good place for you to trade. Now it's not a necessity, but for me that's definitely a rule of thumb, because when you have a surprise, you have a better momentum, you have a better catalyst to help the trade go into your direction. And when trading risk events, I'm really looking to get in and get out quickly. That's why momentum is very important for me. Okay, that's it guys. I don't have anything more to say. However, if you have any questions or if you have any comment, feel free to let me know. Otherwise, I'll be back tomorrow with another daily analysis. Thanks for watching. I'll see you tomorrow. Thank you guys. Bye bye.